Thank you so much for watching Real Estate Insider, our podcast. Today we're talking about non-QM loans. What are non-QM loans? And this is brought to you by one of my clients that's actually in Tampa Bay, Florida, Dr. Richard Brown. He actually owns a anesthesiologist company, self-employed, and we did a jumbo non-QM mortgage for him in Tampa Bay, and he asked us to actually make a video about this. So maybe you're a doctor, maybe you're self-employed, maybe you're an entrepreneur and you're having a hard time documenting your income and the bank's giving you trouble or the runaround, they're not funding or approving your loan. We specialize with non-QM mortgages. We love non-QM mortgages. And non-QM isn't a bad thing, it's not taboo. Non-QM is a multi-billion-dollar marketplace, publicly traded with deep liquidity on Wall Street. Some of the biggest companies in the United States invest in non-qualified mortgages. But I don't want you to think about non-qualified as some bad thing. We're going to talk about it today because it's a great thing. And it's a huge marketplace that's worth billions and billions and billions of dollars to help self-employed people like me, like you out there, to get funding for a mortgage with good terms and not pay hard money prices, but also still get approved to be able to buy your house maybe when the bank says no. So what is a non-qualified mortgage? Okay, so basically, after the crash of 2008, there was a big, huge separation, distinction between, conforming loans, non-conforming loans, subprime. And so the government came out with this word called non-qualified mortgage because there's still people out there that need to get a loan with no tax returns, for example, that they don't conform to Fannie Mae and Freddie Mac. Right? So you have investors that want to do interest-only loans. They're not going to pay principal and interest. You have people that are going to get a mortgage and they're just going to use their bank statements. They're not going to use their W-2s or their tax returns to get the loan. Well, in that case, that loan doesn't conform to Fannie Mae and Freddie Mac, which are the GSEs. So they came up with the term non-qualified mortgage. So that means that maybe you're purchasing a property and you're doing no doc loan. You're doing an investor cash flow. You're doing a bank statement loan. Well, in order to have that whole separate class of loan funding, they termed it non-qualified mortgage. So it's a separate product line in the marketplace. It's not taboo. It's not anything bad. It's totally fine. It's just that if you're in a certain income bracket or category, maybe you're not able to verify your income. Maybe your tax preparer, your CPA, writes off all your income. You still need to buy a house. You still need a mortgage, right? You got the money for the down payment. You got great credit. So that's what a non-qualified mortgage is. And we specialize in non-qualified. We love non-qualified. We can do interest only, investor no documentation, self-employed bank statement loans. Our minimum loan amount is $200,000. So the loan has to be at least $200,000, but we can go all the way up to $10 million. So anywhere from $200,000 to $10 million, we'd love to fund you and help you to get your mortgage loan. So the biggest thing that you have to know is that with a non-qualified mortgage, it doesn't comply to Fannie Mae and Freddie Mac. It just means that, hey, I got a mortgage, I didn't have to show my taxes, I just showed my bank statements, or we underwrote the property based on the investment cash flow, the net operating income, and my mortgage is interest only. Fannie Mae doesn't allow interest only. So that's what non-qualified means. It just means it's not a Fannie Mae, Freddie Mac conforming loan. It's a non-conforming loan. So there's nothing wrong with it. And the other thing is that the terms, you can get 30-year fixed, 15-year fixed. You can get interest rates that have conforming interest rates. There's interest rates that are 4%, 5%. There is a little bit of an increase in the interest rate, usually of about 1% over a prime rate. Like I said, the rates are starting like around 4%, and they go higher based on where your credit's at, the LTV, your down payment, the property location. But the bottom line is you can still get great terms, and you don't need tax returns, for example. You don't need W-2s. You don't need pay stubs. It's a really, really cool program, and we're able to help millions of people all over America. You have doctors, you have attorneys, you have CPAs, you have self-employed sports athletes, you have entertainers, you have dancers, you have all these people are entrepreneurs, self-employed business owners, right? You're a business owner. Maybe you have a hard time with your taxes. The non-qualified mortgage, non-QM loans, an awesome program. We'd love to get you funding for it. If you need any funding, we do nationwide non-QM on owner-occupied with the exception of the state of Maryland. And then on investment properties, we can lend anywhere in the country. So call or text our office at 832-431 633. I want to hear from you. We're open 7 days a week from 9 a.m. to 9 p.m. If you need to get your non-QM loan, reach out to us, call or text us, or click on that link below, and check out my next video, everybody.